Hello everybody, today I will teach about the bankruptcy accounting. So I just use the real example how to do about bankruptcy accounting, and here we begin. First, we know that this is about we need to learn about fully secure creditor, partial secure creditor, and free access. We know that fully secure creditor is mean they can pay full 100%, but with the partially secure creditor cannot pay full because you see that inventory is lower than not payable, so that you cannot pay full in here. And we will begin some specific item. First, we will begin with the assets. Then later that I will talk about liability and stockholder. We know that we have the land and building. That's it over there. The total value about 210,000. But the question they ask, the plan can pay about 10% of book value, so that when we have 210, we multiply 1.1, we got about 231. About then we minus about not payable in the long term in here from here, because land and building is a long term, not payable in a long term, we will minus together, and we have interest payable. That's it on the question they provide to. That's it. Here, that's the interest long term here. They will provide for you in here. So as in long-term asset and long-term liability, they will go together, so that when we calculate together, they will go in the same area. The next one, we have 231,000 minus everything, we got about 26. Why we got 26,000? Because the value of land and building can be the long term of the liability, so that's why we call fully secured creditor. If the land and building below than the long term, they will put in the partial secured creditors. The next one, that's the inventory. We have 41 inventory in the over there, and then we minus about the current liability, that's in not payable, and this is in here, because they use not payable to pay about inventory. They will provide for you in this question, and we just minus together, but they don't pay full, so that is 0. So in the question, you must know that they will use about the physical to buy the liability. You see that land, building, and inventory, that's a physical item, and they will use them to pay the liability. The next one is about free access. So we have cash is still cash. We have investment 15,000 over there. But when we sell investment, we will receive more than 20,000. Okay, here the investment was more than 20,000 if we sell all of them, and then later that we receive about dividend $500, because when we sell investment there is no longer anymore, and when we still all about dividend from the revenue after we investment for something, and we receive 500 partial dollar in here. That's why they given over there too for you. The next one, that's about account receivable. We have 23,000 in here, and we sell them. We got about 12,000, and in here they provide too. Because they sell account receivable and receive 12,000. The next one, that's about prepay expense. We have prepay expense in here with $3,000. However, we receive about here. That's about refund from prepaid expense. They provide in here too. So that we have prepaid expense receive only 1,000. We have equipment in here, and the book value is 80,000, but they say that we can sell the value 40% of the equipment, so we have 32,000. 80,000 multiplied with 40%, so we got 32,000. Later that we have the number in here. Intangible assets, this is infinite life, but right now the bankruptcy, this one is not worthy anymore. It means just like the copyright, something copyright, trademark, but the company is bankruptcy, everything will be zero. There's nothing left to sell. So we have the total money in here. We just sum together, and we receive 93,500. After we sell all of them, we have the liability to pay. That's it. In this session I will explain how to do this one. So we have the liability in here, put over there, and we have left 57,000. Later that we put the number in here first, so that we will calculate 95,000 later. Next, we will move about liability and stockholder equity. Just like the fully secure, partially secure, we have liability with priority, fully secure, partially secure too. Why we have this one? Because that's the priority to pay the debt back to the creditor. We need to pay the debt, and we need to finish on the debt in here. The next one, we have about administration expense. We will have in here, and we need to pay administration expense just like the salary. Next one, we all about the salary payable. We got the salary payable in here, 14,000. In the accrual expense, 18,000. Because 18,000 in here, in 18,000 we have 14,000. That's about salary payable. That's why they put accrual expense from 18,000. You see that connection in here, but we still owe about 1,000 because we just use this number minus this number. We got about 1,000, so that we have 13,000 left to pay. Next, we move to payroll tax payable. This is on the here too, and we need to pay the payroll tax too. You must know that liability with royalty, it should be the salary everything should be a salary for the worker employees we need to pay before bankruptcy. Later that we sum three numbers together, we got 36,500 in here, just like in the P. The next one, that's about not payable. Not payable, that's it, we just calculate like in here. Similar for the long term. Fully secure creditor, it means we have enough money to pay on the debt because we have land and building higher than not payable and interest payable. So that is 0. Partial secure creditor, it means the not payable is higher than inventory. It means they don't have enough money from inventory to pay to the not payable. That's why we put the similar, but they just reverse the number. So we have left, that's about accounts payable, and that's the accounts payable in here. And we have accrual expense. This means we have 18,000. We minus 14,000 from the salary, because salary inside the accrual expense. We got 4,000 in here. The next one, that is stockholder equity. We have 36,000. That's in here. But now the value is 0 because we sell all of them. There is no money left for the company. So that 36,000 becomes 0. So that's why we have the 0 in here. Later that we sum all the number in the unsecured non-priority liability. We got 95,000. Later that we got 95,000. We put back in here. And we got about 95,000. So that we will compare 95,000 with 57,000. We see that we have debt deficiency about 38,000. So that this one company or 38,000. This means the company still owe about the debitor, and they should use something else to pay. This means company still owe 38,000 left after they in bankruptcy. So that's the technique we need to learn how to do about the bankruptcy for the accounting. That's the end. Thank you for watching.